Hello everyone, welcome to our latest Artemis Live video interview. Today I'm delighted to be joined by Christian Mumenthaler, Chief Executive Officer of the largest reinsurer in the world, Swiss Re. Welcome Christian, thank you for your time today.
It's a pleasure, Steve. I hope you're well.
Yes, very well, thank you. I hope you are too, and I hope things are going well and getting back to normal in Zurich there.
They are.
Good. So I thought it would be useful to begin by hearing you talk a little bit about Swiss Re's position at this stage of the year, given we're in peak hurricane season, seemingly potentially a record season, and in the shadow of the pandemic as well. How do you feel the company has weathered the situation so far?
I'm actually extremely pleased how we weathered the situation. We entered this difficult year with a lot of capital. And then very early on in February, when we saw the outbreak in China, we started to hedge our asset portfolio to protect ourselves, which turned out to be the right move to do, which helped us in particular through Q1 and Q2. And then obviously the reinsurance industry is lucky in the sense compared to other industries that the demand isn't breaking down, right? You still have a lot of demand. If anything, you have more demand. So that's good. And then from an operational point of view, we had no problems whatsoever to switch to working from home because we had installed a system a few years ago, which is called Own the Way You Work, where people have a laptop and they can work from anywhere in a flexible fashion. So it was literally just a question of hours to switch people from working from home, and we could fulfill everything. All the processes, the renewals could stay close to our clients, pay the claims, do everything we're supposed to do. So yes, I know we published higher, claims amounts at the H1, but it's just an estimate. And I think ultimately I see no reason why it would deviate from other market participants. So I think it's just probably a reflection of the uncertainties that exist at this stage about the overall loss of COVID-19.
Yeah, absolutely. And the uncertainty is obviously a key thing. It's interesting you mention sort of potentially people buying a little more protection. Do you think the pandemic may increase risk aversion?
I would think so. It's hard to say whether that will stay, right? I think in some lines there's some evidence of that. We saw that concretely in our iptiQ, franchise, which we'll talk about later, probably in the US. We can see an increased interest in buying. This is probably people getting more aware of risk, and we know that's the phases where people may want to protect themselves a bit more. How long that stays is open for debate.
Sure. And so with the year-end renewals, and we're at the time of year when normally we'd all be in Monte Carlo discussing those renewals, or at least beginning those discussions. How do you feel Swiss Re is positioned for the renewals this year, and what's your outlook for them?
Our outlook is optimistic, right? With everything that has happened, I think the industry obviously is moving. You have in the corporate sector, obviously price increases for 2 years now, which are very significant and no signs of abating, and they shouldn't also, right? It is necessary. And you see something a bit less extreme, but still increases in reinsurance. As you know, year to date, about 6% we could see in terms of nominal price increases. Unfortunately, because of lower interest rates, about 4% of that go away from an economic perspective. So and another 2% in our view goes away because we got tougher on assessing the risk itself, right? In particular in Japan, for example. So more is needed for the industry to be sustainable, and I think everybody understands that. So we're optimistic. We're extremely well capitalized. We as you know, we sold our ReAssure operation, which makes us, I guess, one of the most capitalized reinsurer currently in the market. So we'll see. I think still quality will matter, right? This is not. I'm not saying this is a great opportunity now to grow like hell. I think the whole industry needs to focus on quality, right?
Yes, there does seem to be a strong message around terms and conditions coming out of statements in recent days, which is encouraging. Perhaps things have moved a little far.
Compared to the 99 soft cycle, which I also remember, terms and conditions haven't deteriorated as much by no stretch, right? It's a very big difference. When we talk about terms and conditions, we talk more about making sure that the pandemic is not included in NatCat contracts. Right? This is there. The industry, I think, is in clear alignment, agreement between all the participants that that was not the intent. That's not what we want to go, and so we need to be more precise in the language. So that's the biggest change, I'd say.
Yeah. So you mentioned capitalization there. Now, obviously, Swiss Re is extremely well capitalized, as you said, but also you're using more alternative capital than perhaps ever before, with your assets under management nearly at 2.5 billion. How big a role do you feel this could play? I guess a lot of that comes down to how expansive you feel you need to be at this time. And is access to those investors and third-party capital more important than ever?
It is, right? And I may be biased because you might know that I led that team a long time ago, right? In the early 2000s, I was head of retro and syndication, and we issued cat bonds for Swiss Re. We issued the first mortality bond at the time, which I guess is back into fashion now with a pandemic. So I always believe the capital market will play an important role in closing this protection gap, right? This big gap, and there's some risks in the world that are so big in the nat cat field, for example, or take pandemic or cyber, where I think the capital market will have to play a role and will feel comfortable to play a role in this shorter lines. And so we have basically built up all the capabilities in that, right? To structure cat bonds for others, to distribute it for others. We have our own cat bond portfolio on a trading basis, so we can help people, buy and sell cat bonds. And then we have sidecars, which are very important, where we have long-term investors who basically invest in the same book we have. So this is the same participation. We have skin in the game. I think it's a very fair way of doing things, and which means that also in these difficult times, we are able to attract capital. Right? So this 2.5 billion you mentioned, it was 1 billion a year ago, and this is to basically help our clients at the front, being able to provide large protection and still protecting the balance sheet of Swiss Re. So I think it's here to stay. In the nat cat field, in some of these peak risks, I think it will play a bigger and bigger role.
And especially with issues like secondary perils and climate change facing the industry as well.
Yeah, just think about that, right? California, 15% of people bought earthquake insurance, 15. So if everybody bought it, the reinsurance market would not be able to cover that.
Absolutely, good point. So Swiss Re also invests a lot in your own innovation, and you have fostering innovation elsewhere in projects in partnership with other companies as well. What initiatives are you particularly proud of at this time?
This is so vast. It's hard to answer that question in a concise way. I would say the area, if you ask about pride, is probably everything where we make the world more resilient, right? Where we follow our purpose, and it's obvious we're doing innovations that help close this protection gap. So, for example, if you do much more flood insurance now in the US, we have much better models, helped by technology, right? Satellite imagery, all of that. We have made great strides into that. We also are now, insuring ecosystems. So we have this coral reef, protection in Mexico, which is very interesting, right? Is expanding in insurability. We have always a lot of projects in Africa where we insure hundreds of thousands of people through our partners, our local partners in insurance, also through new technologies like satellite imagery. So I guess that's where usually you're the most proud, right? Where you push the boundaries, you try to make insurance more accessible to others. But then obviously there's also the tech-driven things, which are probably a bit more in fashion, which are important. So in the whole, I think, automotive industry, we have a lot of skills and capabilities in data tech, in understanding the risk. We have a great platform in Corso, which they built over the last few years for this international business, which is probably state of the art, and also a solution for some other clients in the reinsurance industry. We obviously have iptiQ, we have our white labeling insurance platform, etc. So a lot is going on. We never stopped investing, also in the difficult times. I think it's really important to keep on investing in new things.
And iptiQ is one of the areas that's particularly interesting, I find, because it seems to allow you to white label your balance sheet, your underwriting rules, and appetite, and expose that to a new range of clients benefiting from distribution. So it's really an interesting play that allows you to break down the value chain and perhaps own more of the relationship with customers as well, or at least benefit from other people's customer relationships too. Is this an area that you see as really important going forwards?
Yeah, very important. So I took it directly under my leadership now. We also hired a new head, Carlo Beverstorz, who is very knowledgeable also in the digital field. You know, the interesting thing is, I mean, we think a lot about technology and insurtech and how it's going to evolve. And I think one thing that people are missing, most people jump on, let's build a digital insurer because it's feasible, right? You can build a very efficient digital insurer, no problem. Tons of people can do that. But what you will see then is you don't sell policies. For some strange reason, even if you have a superior product, you don't sell policies. And the reason has to do with human psychology, right? We have a whole team of behavioral economists, and they will say the act of buying insurance is anti-magnetic, right? It's against what the human brain wants to do. So people are not surfing the internet in the evening to find the coolest, cheapest insurance. It's actually, it doesn't matter, right? It's an act of sheer will to buy insurance, right? It's unpleasant. You have to think about the future, about probabilities, about negative things, about risks. People don't like that. Nobody likes that, even those like us who work in the insurance industry. Therefore, if you build that, you will spend enormous amounts of money to attract customers, and that ruins your business model. So we thought that's not who we are. We are much better at the scale, the technology, the risk assessment. And so we need to give this other part to other people, our clients, our partners, all across the world. And that's why we invested hundreds of millions in basically creating a digital insurance company, but as a white labeling idea, right? As a pure white labeler, which allows anybody to plug in and sell insurance. Also corporates who have never done that, they can further, bind clients to themselves or monetize the clients, but also insurance companies, right? All the medium-sized companies who don't want to invest 300 million in 3 years, it takes about 4 weeks now to get on the system, and then you can start selling, right? So it went from much longer periods to just 4 weeks. So we onboarded 7 people this year, right? 7 brands this year, and many of them during COVID. So you can do it virtually. So I'm very bullish on that model. It will go through ups and downs, but it makes tons of sense in my mind, and we put a lot of energy behind it. And there's no immediate logical, hurdles to growth that I can see. And it's sort of, we're proud to have created a unicorn internally, so to say.
No, it's really fascinating because you mentioned psychology there of people and how they buy insurance, and actually this positions you into the consideration set of a consumer when they're in different scenarios where insurance becomes something they actually require. So it perhaps positions you in a different way, which is great.
Yeah, contextual sale, they call it, right? You buy it when you just need it, right? It's part of your car, it's part of your house, it's part of when you buy a house, you have a mortgage as part of the mortgage, right? That to me makes tons of sense, and it's also good for consumers and helps close the protection gap because you don't have this enormous effort to try to push it on people when they're not thinking about it.
Yeah. And then moving on to the protection gap, which is timely. So your recent Sigma report looked at the resilience index and the gaps that exist around the world. And actually, what it highlighted for me was that the natural disaster gap is still increasing in North America, which I found interesting. I mean, what do you feel is required to reverse this trend, sort of the widening of the gap in one of the most advanced economies in the world? And how do you plan to put Swiss Re at the heart of those initiatives?
It's super frustrating, right? Because it's one of our goals, not just us, it's the whole insurance industry, right? It's our goal, right? To close that. And I know from other CEOs, from clients and competitors, we all want to be more relevant to that. And worldwide, 76% of every loss are not covered, right? But also in the developed country, it's not covered. And that's because the risk itself is increasing, not just because of climate change, but also the wealth of people is increasing, and then the wealthy go where it's the most expensive too, right? So you have houses built at the front. So you have a significant growth of the risk, and the coverage is not following that. And then you probably all have issues of inequality, people not affording that, change of mindset, right? Lots of other psychological factors that go against insurance. And obviously how you try to do that, you try to be innovative, you try to allow for cheaper insurance through the lower cost end-to-end. You try to educate, there's lots of things you do, but in the end, right, all of that is not having that much of an impact. And I think it is tied to what I said before, the psychology, right? Most people think it would make sense to be insured, but then to do the step and get in there for 100 reasons, they don't do it. And so if from a government perspective, from a state perspective, you want people to be covered, because usually as a government, you will have to jump in, right? Many occasions. The only thing that works, frankly, across the world is if you do something mandatory, right? You have sort of mandatory scheme as we have in Switzerland and many other countries. then people are covered. And then it's also very, very cheap, right? Because everybody just pays a certain premium. But for obvious reasons in today's environment, that's not very popular, right? And you don't want people don't want additional taxes, as they would call it, probably in this environment. So I have to admit, it's one of the toughest problems of the insurance industry.
Yeah, absolutely. So let's move back to COVID just briefly, but on the other side of it, not the industry impact, but the change in industries working. And obviously you mentioned that Swiss Re was particularly well set up and ready to go with moving people to working from home. And it does seem the industry's coped remarkably well. Do you think this is something that ultimately will make the industry more efficient and perhaps reduce the amount of travel that people were doing? Because it's obviously a very travel heavy industry, and thousands of us would be in Monte Carlo this week normally.
I definitely think so. Right. It's always hard to make prediction when you're in the crisis, because people have maybe an overblown sense of what this means historically, and then 10 years later people see it differently, right? So we have seen many crises where in the moment, right, you project all kinds of things. But in this case, I think there was a lot of learning happening, right, on the digital front, how we can do, interactions like these in a very efficient way. And for all of us, including myself, right, we're surprised how well it functions, right, how well overall it functions. And therefore, as a little anecdote, when entering this year, last year we had decided to fly 15% less, including the executive committee, right, for this year. It was a huge discussion, right, multiple discussions just to get to minus 15%. Because there was real concerns, right, that you might, miss out with clients and so on. And so, but we had agreed on that. And this year we're minus 80 at this stage, and it's fine, right? And so we used this opportunity to reset for next year to minus 30, compared to 18, minus 30. No discussions, right? 2 minutes discussion, end of discussion. So flying will come back, right? But hopefully for business travel, not to that same extent. It just doesn't make sense, right? It's so efficient to cover part of that also with clients through the new technologies. Yeah?
Absolutely, and good for people with their families as well. And while we're on that topic, do you think we'll see more reinsurance traded electronically as a result of this experience? Do you think this has maybe accelerated shifts towards digital trading?
So I'm super skeptical about that, because I was involved in the early 2000s in the project called INRION, Insurance Reinsurance Online, which was a common project with some other reinsurers, where we all bundled our capacity on a platform. We tried to standardize some products, and on paper it made so much sense. I was so convinced as a project, somebody who was involved in the project, that this would be the revolution, and it didn't work at all, right? At all. There was no volume coming to the platform. And in hindsight, I understand again, right? There's just not enough savings in it, right? There's not like millions of reinsurance contracts being traded daily. You basically, the process is you have insurance companies discussing for a whole year how to slightly change the program and adapt to this and take that out, etc. And you have discussions with Swiss Re and their other the brokers and other of our competitors, and then finally come to a landing of something highly tailor-made. And to exchange is 1% of the effort, right? So what would you take out of this highly tailored value chain through electronic exchange, right? So I can't see that. I know the idea is around, but having gone through it once, I don't think that has changed. Also the human psychology, right? It's just not, there's not enough savings in it. What I think could happen one day is if you had at the primary level, every contract coded on blockchain, right? And then the reinsurance would be more something much clearer, right? It would be these contracts, the sum of all of these contracts would be seen transparently by all the reinsurers, and the reinsurance contract would be defined in such a way. And so every claim that comes in the primary side automatically gets translated into a reinsurance contract on the reinsurance side. And in theory, then you could also trade these shares in reinsurance with others, because it's always completely transparent down to the granular level, what risk is in it, what not. But that requires a massive change of the industry, and it would have to start with the primary players, right? Encoding everything in a standard way in a blockchain system. So whether that comes or not, I don't know. But just to give you one scenario where this could work. But just to do the reinsurance part, to me, is just a little tip of the iceberg, right? The most complicated part.
Sure. Interesting. So let's move on to sort of your outlook for 2021, and I guess it'd be interesting to hear your thoughts on COVID for the industry into 2021. Obviously, we're all a little concerned about the potential second waves through the winter, and then also perhaps on corporate solutions and where you see opportunities for Swiss Re into next year.
So our view on COVID is humanity will have to live with COVID, right? It's not going to go away. It's not like it's going to be miracle vaccine. Everybody gets vaccine and it's gone. I think that's unlikely. There could be vaccines, obviously, and they could help and they could be part of it. But ultimately, humanity will live with that, as it did with all other viruses that came before that. And the time of adaptation is painful and difficult. But I think mentally, I think it's important not to all just hope for this vaccine. I think if you look through all the different experiments, all these different countries doing different measures, what works, what doesn't work, I think there's a lot to learn from that. And I think there's a lot of evidence that you can actually live with it and have, let's say, 99% of your economy running. It's just certain activities and certain behaviors that are very dangerous. They spread it, right? This is a dangerous virus. It's much more dangerous than influenza. It's not as dangerous, obviously, as some other things that have hit us, but you have to treat it with respect. But I think you can see it's feasible, right? Which is why I think that if we deal with it rationally, even now that there's a second wave in Europe, so far hospitals are not overcrowded. The death load is much lower than in the first wave, which has to do that it's a much younger population now that has it, so it's much less harmful there. So my view is we just need to have a science-based approach, not an ideological approach to this. Constantly learn, constantly improve all of our behaviors, and I think we'll be fine. We can get through that. Now, obviously, the economic damage we have already created will ripple through 2021, 22, etc. So we're not out of the woods. But I'm just saying we have to get to something a bit more normal and not a constant psychological obsession with this virus. What does it mean? So I think insurance, reinsurance are here to stay, right? They won't change because of the virus. My view is that in the corporate sector, because prices went down a lot since 12 or 11 even, the price have to go up a lot. There has been so much pain in the corporate sector that prices actually have moved, right, very significantly. I see that continuing. So I'm actually bullish, right, on the corporate insurance sector. I think it has to basically make up for all the losses, and it's feasible, right? Overall, I talk about the industry overall, and then reinsurance also. I mean, as I said, I'm optimistic. I think because of all these several bad years now, and also the alternative capital getting tired of these results, right? And other factors like interest rates, we will see continued price increase to get back to a more sustainable level. Right? So my outlook on the reinsurance industry, I know now everybody's depressed, but it's actually more positive than it has ever been in my last few years as a CEO.
Interesting. And for you as a CEO, what's your core focus for next year? If there was one thing that you wanted to make happen in the organization, what would it be?
Well, I guess the challenge is everybody wants to know one thing, right? And the challenge, I think, in these times is you need to do several things at the same time. All right. So you need to fix certain things. Clearly, right? Like the turnaround of Corso, casualty and reinsurance, you need to fix these. At the same time, you have to enable growth, right? You have to think about growth. You cannot just do fixing, and once it's fixed, people say, okay, what's next? You need to still invest, right, in things, in innovation, etc. And then there's a cultural change that goes with all of that. I think in the insurance industry generally, but I can also speak for us. Cultural change is very important, right? We have to move towards a more agile way of working. And cultural change always take a lot of time, right? So I think there's several things we need to do at the same time, and that's the challenge.
Sure, a busy year ahead. Thank you very much for your time, Christian. I really appreciate it. It's been a pleasure talking with you today. And yeah, please stay healthy and safe, and we'll talk soon, I hope.
Same to you, Stephen. All the best, and to everybody who listens to us. Stay healthy and safe.
Thank you.